What's up, everybody? Steve here. I think we're going to hear a lot more about commercial mortgage backed securities. Unlike the last real estate recession, which were more residential mortgage backed securities, there are talks about the commercial mortgage backed security area, and it's kind of disturbing, and I want to talk some details about it, and I'll leave a link for the article below as well for you guys so you can read up on it. In the last real estate recession, lenders would essentially lend to anybody that really had a pulse. So for example, a bartender that was making mediocre money would be able to do something called a stated no doc loan. So essentially they were stating the amount of income that they would make and put that on a loan application. And also the lender didn't require any documentation in some of these cases as well. So you're talking no bank statements to verify how much money they're making. You're talking no tax returns to verify how much they're making. They would bundle those crap loans with A+ loans. So like a borrower who is an executive that has, good income, long-term income, great credit, they would take a lot of loans like that and bundle them with other just crap loans like the bartender scenario, and then they put those out to the open market as securities for investors, basically naive investors to purchase. So these investors could be anything from college endowments to ordinary investors to pension funds. Now everything is great until it isn't, and when the real estate market and the values began to go down and people couldn't keep refinancing and pull money out and people were losing tenants, then everything became exposed. So a lot of these loans went into default, and then these securities really just negatively affected all the investors, and they lost millions and millions and millions of dollars. Now right now our government has been spending billions and billions every single month investing into these mortgage-backed securities on the residential side, so it alleviates the banks to lend out more money. Currently they are tapering, or they're in the process of talking about tapering and pulling back on those investments. But this is happening all over again, but in the commercial arena. Now, the loans that were issued were loans provided to businesses, and it is alleged in a handful of articles that I'll put in the link below, it's alleged based on a couple of whistleblowers that when they were creating the securities for investors to purchase, they were inflating the net operating income of these businesses as high as 5 to 10%. So essentially, if a business was making, $1 million net per year, they're increasing that net operating income to make it look like that business was more successful than it was. And then they're taking multiple businesses like that, packaging them up, and then they're selling them as securities to investors, same thing, to pension funds and other investing institutions out there. Now with the pandemic looming, we are seeing the exposure of these businesses within these securities and the high default rates, and I think we're going to see a lot more of this. This is basically just on a small scale of this whistleblower on specific securities out there, but they are all tied to certain pension funds, and I'm sure hedge funds and college endowments. And I think that we stand to see a lot of people lose a lot of money based on this illegal activity, and the small guy is really getting hit. And that was the whole reason for this whistleblower as well, because he's seen what's really taking place, and he knows that when shit hits the fan, it's going to be the small guy that's going to take the brunt of it. Meanwhile, all the guys that were involved in this, there's probably not going to be much accountability or even jail time because of their actions. They've made so many millions and millions of dollars that they have the attorneys at their disposal to keep them out of jail and to pay off certain government entities or politicians to keep them out of jail. And it's just one vicious cycle. So it's one of the things that I always look at too, in terms of, we can't really trust our government to look out for us. We can't really trust Wall Street or these large institutional investors and hedge funds to really look out for our best interest. And I think that, if you do have a pension fund, or if you do have a pension and you're relying on a pension for that income for future retirement, I think it's important to make sure that you have some sort of side hustle in a sense, or you have other income coming in besides that, or maybe passive income from real estate investments. Because I think that once again, you know, I think we're going to come into a scenario over the next few years where a lot of wealth is going to be gone for a lot of people. You know, a lot of wealth was made during the pandemic, and I think that people saw stock values, people saw home values increase dramatically, and people feel this almost false sense of security of their wealth. And I think that it's a matter of time before we start seeing a lot of these assets you know, encompass this asset bubble, and I think eventually things are going to come down in value. So I'd say be prepared, and I'll drop those links below, and I appreciate every subscriber on this channel. Thank you very much for being here. I'll see you guys on the next video. Thanks a lot.